If you've received an SMS from the income tax department about your crypto trades, stop scrolling. You cannot afford to skip this video. This isn't some phishing scam or random alert. It's a targeted message backed by real-time data from your PAN and TDS records. The government knows you've made virtual digital asset transactions, Bitcoin, Ethereum, maybe even NFTs, and they've found a mismatch between what you earned and what you reported. Whether you're a day trader on CoinDCX or a long-term hodler using Binance, this message is a warning. One that could easily turn into a formal notice, a heavy fine, or even prosecution if you don't act now. In this video, I'm going to break it all down for you. Every single thing you need to know about crypto taxation in India, how the income tax department is tracking your trades, what Schedule VDA is, how ITR-U works, and what penalties you could face if you ignore this. And more importantly, how to fix it step by step with the help of tools like KoinX that make this entire process seamless. Let's begin. The first thing to understand is what's really going on. The Income Tax Department introduced a new section in the 2022 Finance Bill, Section 194S. This law made it mandatory to deduct a 1% TDS every time a virtual digital asset, or VDA, is sold or transferred. This isn't just for massive trades. If you make even a single transaction worth over 10,000 rupees, the exchange is required to deduct TDS at the time of sale. Every time this happens, your PAN gets tagged and that data goes straight to the government servers. Now, during tax season, the department compares that TDS data with your income tax return. If there is a mismatch, for example, if your return doesn't mention any crypto trades, the system immediately flags it. That's how you receive this SMS. Now here's where most people go wrong, and this is the section that the SMS is referring to. Schedule VDA. This is a special section in your income tax return form that's designed exclusively for reporting crypto transactions. Whether you bought, sold, transferred, or swapped digital assets, or even received rewards through mining or staking, it all must be declared in Schedule VDA. This includes the date of purchase, date of sale, value of the transaction, and gain or loss for each asset. If you skip this section, even unintentionally, your ITR is considered incomplete. That's what the income tax department has flagged, and that's why you received the message. Now let's talk about the consequences. If you choose to ignore this soft warning, it can escalate quickly. The income tax department may issue a formal notice under Section 148, questioning your source of funds and underreported income. Penalties could be as high as 200% of the tax amount. You might even be taxed under Section 68, which applies to unexplained income. And that comes with a tax rate of up to 60% plus surcharge and cess. In extreme cases, there's even the risk of prosecution. This is not a risk you want to take. Thankfully, the law provides a way to fix this. Legally, cleanly, and without stress. It's called ITR-U, introduced under Section 139, subsection 8A. This is also known as the updated return. It allows you to revise your original income tax return and add the missing crypto details. You can do this within 24 months from the end of the relevant assessment year. But here's the catch. The longer you wait, the higher the penalty. If you file the updated return within 1 year, you must pay an additional 25% of the tax owed. If you file it in the second year, that penalty goes up to 50%. So time is of the essence. But here's the challenge. And this is where most traders struggle. You probably used multiple exchanges, made dozens of trades, some peer-to-peer, others international. Keeping track of all your transactions, calculating accurate gains, identifying TDS, and then compiling it in Schedule VDA. It's overwhelming, even for experienced investors. This is exactly why tools like KoinX exist. KoinX connects with all your crypto platforms, whether Indian or international, and auto-fetches your complete transaction history. It organizes your trades, calculates gains and losses using the government's FIFO method, checks your TDS status, and generates a fully tax-compliant Schedule VDA report. It even helps you figure out exactly how much tax you owe and how to fill out the ITR-U form. You don't need to be a chartered accountant. You don't need to worry about Excel files. Just plug in your accounts and KoinX takes care of the rest. So to wrap it up, if you've received that SMS from the income tax department, it's not spam. It's a heads up. They know you traded crypto and now they want to know why you didn't report it. You have a chance to fix it before it becomes a legal problem. Check your old ITR, review your TDS entries in Form 26IS or AIS, and see if you missed crypto reporting. If you did, use the ITR-U form to update your filing. And most importantly, let KoinX do the heavy lifting for you. It's fast, it's accurate, and it keeps you safe. Go to coinx.com, link your exchanges, generate your Schedule VDA, and file your updated return today. Because in crypto, timing isn't just about market entry, it's also about tax compliance. And the clock is ticking. I'm your host Punit, and if this helped you even a bit, make sure to like the video, share it with your fellow crypto traders, and drop your questions in the comments. I'll be reading them all and helping you navigate this new world of digital taxes. Until next time, stay compliant, stay smart.